This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Bitcoin breaching $46,000, really on a tear. Checking in for a live look, the CoinDesk Bitcoin price XBX index currently trading at $46,200. Bitcoin is up almost 6% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So let's look at some of the top stories of the day. Fresh off the heels of announced plans to go public, Circle saying Monday it intends to become crypto's first full reserve national commercial bank. If its various applications are successful, Circle's digital asset bank would be the first crypto native institution to operate under the supervision of the U.S. Federal Reserve, U.S. Treasury, OCC, and FDIC. And Senators Cynthia Lummis and Pat Toomey announcing this afternoon a compromise amendment to a crypto provision in the U.S. Senate's $1 trillion infrastructure bill that specifies crypto tax reporting requirements for brokers to potentially include miners, developers, and others not traditional considered brokers. There's a live look at the U.S. Senate floor right there. Toomey saying their bipartisan agreement between fellow senators and the Treasury Department makes sure a broker only means centralized exchanges and excludes software developers, validators, node operators, or other non-brokers. The full text of the compromise was not immediately available, but moments ago, I had a chance to speak with Wyoming Senator Cynthia Lummis. Have a listen.
The amendment is not as explicit as the Wyden-Lummis-Toomey amendment, but this is something that we worked out with the Treasury Department. It does have the support of the bill's underlying floor managers, Mr. Portman and Ms. Sinema, and it also has the support of Senator Warner. So Senator Toomey and I will be offering this amendment at about 3:30 p.m. Eastern Time today on the floor. It's called a live UC, which means it requires unanimous consent even to be considered. And so if any one person says, I object, then it's all over. But if no one objects, we'll get a vote on the amendment.
Wow. You know, you mentioned that it's not as comprehensive as the amendment you initially put out. How is it different?
The Wyden-Lummis-Toomey amendment was very explicit in the way it described who was exempt from reporting to the IRS. This compromise provides for more implicit definitions of broker. So it does leave some discretion to the Treasury Department that the Wyden-Lummis-Toomey amendment attempted to eliminate.
All right. You know, I'm going to bring up a tweet from Senator Ron Wyden. He wrote that we've been working hard to get a deal. I don't believe the cryptocurrency amendment language on offer is good enough to protect privacy and security, but it's certainly better than the underlying bill. Majority Leader Schumer says he won't block unanimous consent request on it. So I understand you agree that there are some holes in this compromise amendment, perhaps regarding privacy and security. And second, how are you going to convince 100 senators to agree to this and give unanimous consent?
We've been talking about it for a number of days. This is a subject that very few members of the Senate know about. It's just not on their radar screen. And for those who are learning about it for the first time, they're trying to learn how to, I'm so sorry, my phone is ringing. Oh, there we go.
Sorry, no worries.
For those who are just learning about it for the first time, they're trying to grapple with what the issue is here, as well as what is the best way to address it. So it's been very challenging. What's been really helpful, Christine, is that the Bitcoin community, the Ethereum community, people who own or play a role in digital assets have been tweeting their senators about their support for the amendment. They've been helping educate their senators. It has brought the expertise of the digital asset community in touch with their senators. So now they're starting to have a dialogue for probably the first time ever. And it's just been a great experience. So I have to say there's a silver lining behind this whole effort, even if it doesn't pass. It has brought the digital community in communication with their senators in a way that helps individuals educate their senators. It helps senators know that there are individuals out there in their state who care about this issue, who either invest as a store of value or who even trade in digital assets. And now the senators can learn directly from their constituents about why this is such an important issue. Mm-hmm. So all things considered, gosh, it's just been such a positive experience. And the people in the digital asset space, I just want to say thank you so much for reaching out to your senators. You've made a huge difference in this whole process.
Excellent. The crypto community certainly has come out in full force. Now, this compromise comes after the Senate conducted a number of procedural votes late Sunday to advance the bill's original text. So unless the Senate can achieve that unanimous consent that you talked about on the compromise before the final vote on Tuesday, the legislative body will send the original provision to the House of Representatives. So how likely is it that majority leaders may get fed up and just move to pass this legislation with the original language as is?
It's possible that this bill will pass with the original language. We will continue to work as this bill goes to the House with members of the House who have interest and expertise in this subject to see if it can be further modified. But in the event that it can't, we'll begin to work very carefully with Department of Treasury, who will have to write rules to implement this definition of broker. So we can make sure that as many of the innovators who don't have access to the information that Treasury is seeking are not included in the bill and its definitions and its rules, and only people who actually have the information that the IRS is looking for are included in the definition of broker.
Senator Lummis, I'm wondering if you could provide some clarity on why Senator Wyden and his amendment singled out proof of work protocols and left out proof of stake, and DeFi developers left them vulnerable to impossible porting provisions. Was it just hastily written?
You know, there's so much going on in this space, even among people who used different proof methodologies. There are some cryptocurrencies that are talking about moving to another proof methodology, which requires a tremendous effort. So I really don't think there's been any effort to exclude from this discussion certain kinds of cryptocurrencies and pick winners from losers. I just think that the compromise made things more implicit, and Senator Wyden was very hopeful to have explicit language.
Senator Toomey mentioned that this was a compromise with the Treasury Department. So have you spoken to Treasury Secretary Janet Yellen or anyone from the Biden administration? And what were those conversations like?
Well, I have not spoken directly with Secretary Yellen, but she did just tweet out that she's accepting of this compromise. So that's very good news. It was Senator Warner, I think, who was doing most of the conversations with Treasury.
And do we know, what was their positioning through this process?
Well, I think they're concerned that there are people that are cheating on their taxes and using cryptocurrency to do it. So I think they were trying to cast as wide a net as they could in defining broker. So they have the options to go after people who are in a position to cheat on their taxes. The availability of information to the IRS certainly helps them identify who is not reporting taxes on cryptocurrency. So I think that's why they wanted to cast a wide net. We wanted to make sure that people who simply don't have information that the IRS wants are not being bothered by trying to round it up. And that would include miners and people who validate and software and hardware producers who make digital wallets available to people. So we just want to make sure. Senator Toomey did a good job in a press conference this morning. He said, Goldman Sachs has to report things to the IRS. Their power supplier should not have to, because the power supplier to the company doesn't have access to the information. I thought that was kind of an interesting analogy to try and explain that people that are remote from the customer really just don't have access to the information the IRS wants.
Right. And at the end of the day, how significant is this crypto compromise amendment in the context of the rest of the bill? Is it quite a small consideration for senators?
It is for most senators, which is why the fact that it became so high profile is interesting. But the silver lining to me behind this whole effort is that it did become high profile. It did elevate the discussion about digital assets. I don't think many members of Congress realize how significant this is. I tried to compare it earlier to the beginnings of the internet. No one who was outside of developing the internet had a clear understanding of just how transformative that technology would be. I think we're at that same point with digital assets, distributed ledgers, and the blockchain. The applications to come are going to be so consequential to our economy that we can't even foresee it now. But people who are looking back 10 years from now would say, wow, it was a game changer. It was a game changer for our economy and the way we do business with each other, the way we contract with each other. It's just going to be so extraordinary. So this is sort of the foundation to get this all right. We don't want to get it wrong to start with. So Kirsten Sinema and I, in creating the Financial Innovation Caucus, wanted to first come out with a set of definitions so we can start developing that sandbox, that regulatory framework that will create the basis for regulation but not stifle innovation. And we got trumped. The Treasury Department came out with a definition of broker in a bill that we didn't expect to see it in. And so now we're playing catch up. But in order to, it became kind of a good example of what we need to do, how the way we define things can make a huge difference, and why we have to get this right. So I think after we get back from the August work period in our home states, we're going to be able to really ramp up the Financial Innovation Caucus in a way that people will understand these definitions are very significant. It's a great place to start, and that we have to have these dialogues so we're not legislating from a position that is ill-informed or ill-advised and has unintended consequences. And so what we tried to do with this amendment is to remove some of the unintended consequences of the definition of broker. Now going forward, I hope we can be more proactive instead of reactive. And we've really been in a reactive position when that definition of broker for digital assets showed up in this bill.
Well, Senator Lummis, it seems there is a lot of work to do, and you've been doing triple, quadruple duty. So thank you very much for coming on this afternoon, and good luck as you bring forth the compromise amendment onto the floor in just minutes.
Thank you, Christine.
All right, that was Wyoming Senator Cynthia Lummis, who will formally present the Toomey-Lummis-Warner Compromise Crypto Amendment on the Senate floor at 3:30 Eastern Time.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin on a tear, rising 7% for the day, charging toward a 3-month high. Data data showing Bitcoin's push to higher price highs, represented by the letters HH, and higher price lows, there in white with the letters HL, was precipitated by a short squeeze, which saw 126 BTC worth of short positions liquidated on Friday. Digital asset firm ZeroCap telling CoinDesk perpetual funding rates, quote, have turned positive, meaning that the derivatives market is clearly positioned to the long side, and market sentiment is gradually building. Significant outflows from exchanges have also been accelerating, indicating a lack of short-term selling intent, according to ZeroCap. Despite market concerns around the proposed crypto tax reporting provision in the U.S. infrastructure bill, institutional activity is once again on the rise, which is also reflected in the grayscale premium, reaching slowly toward positive territory. And joining us now to discuss Bitcoin price action is Mannik S. Dhillon, president of VictoryShares and Solutions for Victory Capital. Welcome, Mannik. So as you see Bitcoin surge right now, what's your thesis behind this market pop we're seeing?
Well, first of all, thanks for having me back. I think your prior guest has a lot to say about it if you think about it, right? We have a lot of attention being put on crypto assets, digital assets on the floor of the Senate. That's unbelievable. You think about, what's happening with that conversation in Washington, D.C., and I think a lot of people can look at it and say, wow, well, people want to regulate it. There may be tax consequences and may view that as a negative thing. My opinion is it's actually a great thing. With regulation comes institutionalization over time. The fact that it is getting attention is phenomenal. The fact that they're actually going to take up the time of all the senators involved to have a vote on the topic is phenomenal. Mm-hmm. And you heard Senator Lummis talk about the game-changing nature of this. So now finally, crypto assets, digital assets, Bitcoin getting the attention of lawmakers is a great thing for the asset class. And
I hear you, Mannik, but this infrastructure bill being debated could have major consequences for the crypto industry if it passes in its current language. So by what we're seeing in the markets is, traders are convinced that the language will be amended, so business is booming, or does the market not care?
I think they realize that at least there's an attention on the topic, that there are details that maybe were not considered originally by the lawmakers. And that's important. Right. So it's the same thing when people talk about what is the SEC going to do in terms of products. The fact that they're looking at it and they have somebody in the seat of the chair that understands the topic, who can be objective and fair, I think is important. So even if the infrastructure bill gets passed in its original form, you heard comments from Senator Lummis that there is a willingness and opportunity to discuss the details of it once it actually gets to the Treasury. And I think the fact that it is getting noticed is important here. And I think that's what's important. If the crypto community, if their comments, their concerns had gone dismissed and unheard, that would be probably the more negative scenario. And obviously that wasn't the case. It was enough to cause disruption to the bill.
And do you believe this surge is sustainable? Do you think that the catalyst is this infrastructure bill and what is going on in Congress? Or are there any outflows, inflows that you're watching that may suggest there are other market activity at play?
I think that's part of it, and you can't entirely attribute the entire move today to that. You think about what happened over the weekend with Ethereum and the London hard fork, and what that presents in the future as potential enhancements and opportunity. This is why we're excited with the product that we rolled out last week, which is the fund for accredited investors on the NASDAQ Crypto Index. It's more than just Bitcoin. It's about developments and opportunities that are transpiring in a lot of different digital assets and crypto assets. And they're all going to keep each other moving. And if, in fact, it is the game changer that your prior guest suggested it could be, it's a long-term play. It's an institutional, strategically oriented play where people are going to step back after many years and realize they were glad that they made an allocation to the asset class.
All right, Mannik, appreciate you coming on to the show. We got to leave it there, but very bullish outlook, I see.
Thank you.
Right. That was VictoryShares and Solutions President Mannik Dhillon. All right, that's our show. Thanks for watching All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.